Okay, good morning. How's everybody doing today?
Hey, good morning, Greg. Great.
Good morning, good morning. So I think today's reaction even after the employment report that has been like a wow report as of late, that will change in time and no one will remember it, or it won't be such a big deal anymore. Um, anyway, because of the hourly downtrend, meaning prices, while yesterday's rally formed a bottoming tail bar in the futures and the S&P 500 and the Qs and so on, they couldn't get through resistance. And the level of retracement certainly is bullish. And that's one of the ways that we step-by-step review what's happening in the analysis, looking at price. So retracements tell us the strength of a move. What is the depth that they can penetrate an overhead resistance area? Can they get up? Of course, can they get above it? Another concept is how do they react to that resistance area? So ignoring the economic report and just looking at the technicals, as I've mentioned and talked about, over and over to nauseum, about this congestion and contracting ranges and such. The bottoming tail bar is another bullish sign that buyers step up at support and that they back away at where there's resistance or supply. So at this resistance area, for the moment, prices are going sideways, which is bullish. They dip down under what is or was being created as a launching pad, but buyers stepped up again. So the question now becomes, can it make a higher low here? And in addition, of course, can it get above this area? So if prices can get above here, the top of the topping tail today, that opens up the door to a move, not a big one, but a move up into this void area right here, somewhere in this level. Who knows where it stops? The top of this bottoming tail bar and the red bar is this area right here. So let's look at it we can look at it on the S&P 500. And this is showing the gray areas are the overnight data, which obviously are not quite as clear. Let's go to the spiders. Now you can see the levels here if you're looking at S&P cash. So looking at the spiders, and I know I have them in this here. All right, so there you go. It's a bit clearer. It looks like the futures. The gray area is what's happening overnight, the dip, the attempt to move back. So now what was being created as support, if it could have gotten above here, has now become resistance. Now, that being said, that resistance, this bottoming tail bar, this deep retracement is suggesting that buyers obviously stepped up in a big way. Should they shy away now because of that unemployment report? I don't think so, but we'll have to see ultimately if prices can get through this area. So what has to happen here at the open, or maybe in the next 30 minutes or so, is prices churn over here. And this is what you're going to want to watch for to see if they can churn or even blast right through it and then try and attempt to move up toward this next resistance level. So the takeaway here is that while we've got this bottoming tail bar, encouraging sign for the bulls, we don't have anything of significance to suggest a meaningful move to the upside, just potentially to the next level where sellers will be again, and this will continue unless we can get through, this area here. But it's slowly improving. But as I've coined this market, Mr. Schizophrenic, I do not, put out of the possibilities that today could turn into a red bar after a bottoming tail bar. As crazy as that would seem, of course, we're open to it. because if this continues to roll over and go to the downside, that's exactly what that's going to look like. So let's look at the Qs. Same thing going on here. Didn't get down to the 200 MA, just slightly broke under this support, bottoming tail bar. Love that to see when prices poke under a support level and buyers step up again, giving it a shakeout type of a pattern. So overall here, the expectation normally would be that we're going to deal with probably chop here today as buyers and sellers try and figure out the battle lines as to what's going to hold. Can we get through here? Can we attack this area up here? And back and forth. So as the market goes, it's not something that tells us to have an expectation of any kind of meaningful move or to want to trade the spiders, Qs, or the equity futures. The Dow, same story. They've got a little bit above that area, but the same, move up, back down, bottoming tail bar. We'll see if we can get through here. A lot of work to be done to clean this up if that's going to happen. Bonds are up a little bit. There was that big breakdown. Interest rates went up. So interest rates, when bonds prices are going up, these are the futures. Interest rates go down, and the media, managers, whatever, the last couple of weeks concerned interest rates are going up. Oh my God, possible inversion, blah, blah, blah. Markets concerned about things that aren't even in the realm of possibilities in the short term, but they're worried about it. And that's okay. They got to worry about something. They got to talk about something. So that's way far off. But it is what it is. Oil up a little bit here, just consolidating, still holding well. As we talked about yesterday in the room, there's oil stocks that broke out and look great going higher. There's others that are chopping around. There's others that move down. And, that is what this market is about. Parties here, destruction there, even within the same sector. Gold, testing its 200 MA. It's just a mess. We're not interested in gold. At some point, maybe it comes back around. Some individual stocks, looks like Celgene's getting some attention. Not interested in that whatsoever. What else we have down here? BABA actually down. That's messy. Apple, that's moving up. So Warren Buffett on CNBC saying he bought like another, 85 million shares, but gave up the battle on IBM. Even people with great records, maybe the best, whatever, I don't know, can make a mistake. If you remember back in the day when it was reported that he bought this, I think it was at about $215, somewhere around there. And so selling his last shares down almost $100. Everybody can be wrong. And what else we have here? Wow, look at this one, down 15, 16%. That's taken a hit. That might be worth keeping an eye on for an intraday short. 64, 94, way down under the 200. That's a pretty big gap, but it may take a little while as buyers try and play the bounce. We'll see what happens with that. I'm going to throw it on the list. Amazon down 4, no biggie. Bank America down a little bit. Financials took a hit yesterday, and while they bounced back with the market, that bounce may have been only because the market bounced. So that's going to be something that I'm interested to see if they can recover. You see the bottoming tail bars, they dipped down here and came back, but MAs are trending down. It went sideways here where it could have possibly launched to the upside, but now it's broken to the downside. So one bottoming tail bar, that's one bar that points to one piece of information. And with any candlestick, you put that one candle in the context of the bigger picture. So what do I overweight? This topping pattern, downtrending moving averages, or one bottoming tail bar? The obvious answer is, the bigger picture here, bigger pieces of information that are bearish. So now we see what's happening. Can it chop around? What is it going to do? And we monitor it. Because right now we do have an opposing piece of information against this information that suggests it goes lower, but we have to give it time, right, to develop. That's what sets up high probability trades. IWM up a little bit, no big deal. Tesla, no big deal. Pandora surprised, right? And looking higher. That could be interesting from a longer term point of view. The 200 is up here. It is a huge gap and a long base here. So basing stocks are always interesting because they provide the potential for, sizable moves, but realize that they're not momentum stocks, so they don't move fast. And when they do move fast, they typically stop, come down, not quite as fast, but then chop around a bit. So you got to be patient with them. And sometimes they really disappoint, something like what happened here. They look great and then bam, and they start the process again. That is the essence of a bottoming pattern. Facebook down a little bit, not a big deal. In the video yesterday, I talked about the fact that, this is acting relatively well on the daily time frame. The weekly is a potential sell setup if it trades under these lows here. So if you say under 170 opens up the door to moving lower. So you want to keep an eye on that if you are a holder of Facebook. GE continues to bottom out here. It's going to take time as well. And that's about all I have in my list here. Let's trades. You can see what's trading. Rate. Oh, Shack. Shack is up 5, continuing. So that might be good for a gap type of play. And that is about it. So, Dan, I will hand it over to you.
All right, awesome. Yeah, and I have a couple more, gaps or just earnings trades, the same ones that we looked at into the close yesterday, and we'll see how some of them are shaping up. But let's first take a quick look at opens, and we don't have that many opens, which is fine. I mean, got shaken out of a few of them, unfortunately. Our oil XLE, we have a covered call. It's doing totally fine. Halliburton, we're short the 52.5 calls. So we've done this twice now where we've shorted perfect calls to reduce our cost basis. And we're going to do the same thing today. I can't tell where it's gapping, but we're going to sell an out of the money call that expires next week. I'll just watch it because we're close to the expiration, and it'll still have some time value today. So I'll post an adjustment for that when it sets up. XRT we're in, nothing to do. We're trying to leg into a covered call. Oxy, we have the bear call spread, but it has earnings. So I'm hoping we can, get some weakness ahead of earnings and close that one out. FTR, we're in a put spread, looking for a core long stock entry on a pullback. XOP, we are not in, but, watching it in the next week. Intel, we have a put spread, and that's fine, doing nothing. And that's it on the opens. I'm still watching this USG. So we have a 2-bar, 50% pullback into here. That still looks great. Now the gapping plays, or earnings rather. EXC, I see it's not good volume here, but it's too extended, so absolutely nothing to do right now. But on a pullback, that's a great put spread. RHT is not an earnings trade, but I just noticed it, and it looks great. If this gap is real here to 165, that's relative strength to the market, and bullish daily. It had a gap and crap here. I'm assuming that was earnings, but it's negated it. This was roughly 90% retracement, bottoming tail, rising 20, nice bullish green bar close to new highs, the real body. 1, 2, 3, 4, 5 consolidation bars in this wide range green bar, relative strength to the market. If this is gapping up here, as long as the markets are holding up, then this looks like a fantastic, I'm just throwing out an idea, 10-minute high, 15-minute high. We'll watch it, so I have it in a thumbnail. Extended monthly, of course, but it's still strong, all time frames. Now into the earnings. FLR, Greg mentioned already. Yeah, it just shocks me. I mean, look how long this company, look how many years this company's been in business. What? I just don't get it. How in earnings you can be that far off just in 3 months. The world hasn't collapsed. I mean, 48, it's gapping down $11, which is almost, what, 18, 19%? That's crazy. So look at $48 here on my weekly. I mean, way the heck down here to this breakout area. So yeah, I'll watch that too. And I have no idea if it's going to, how it's going to set up. VFC, it's light volume. I really can't tell. I can't rely. I told you I can't rely on pre-market data unless it's thick, unless I see a pattern there. But Dan, back to my point. How can it be that catastrophic, good or bad, in 3 months if you've been in business for a decade or more, whatever? Vert, very whippy here. I don't like this gap down. Extended weekly, monthly. I'm deleting you. Starwood. Light volume here, but now see, because of the resistance to the left, I'm immediately just labeling this a possible 30-minute high, because it needs to prove to me and give me a nice 30-minute setup to interest me, as opposed to Red Hat. What did I say? 10-minute high, because that's set up more likely to trigger than this one. NWL, very sloppy pre-market, but 27.45. It's right in the middle of this junk. I have a junk weekly and monthly. You're gone. LNG. I like this wide range bar here. Kind of light volume, but we got 61 bucks. So that's a gap breakout. Very, sloppy trading here. It's extended on the weekly at a prior high, but it's gapping up. Bullish monthly. It's definitely worth a watch. We'll come back in 30 minutes, see how he's doing. 1084. So small gap down here from 11, but it's a mess. And it's bio, I think. So you're gone. Old Fred, we said, looks like he's going to his graveyard, gapping up $1.82. So it's gapping up to resistance, but I'm not touching that dog. Cell G, bio, 87 bucks. It's gapping right to the middle of this range. Absolutely no interest whatsoever. Look at a bearish weekly, bearish monthly. So it's gapping right, to these two daily bars, narrow ranges, which is this resistance here. You know, we'll keep an eye on it. Maybe it does end up being a short. SIBO here, Chicago Board Option Exchange, bearish all time frames. So if this it's gapping up here, you know, it looks like light volume, but if that's real, you know, that's a bullish gap, 108.50. But it's still into this congestion area. I'm going to set an alarm because if it negates this gap and takes out the low, then this looks lower, particularly after negating a bullish gap. So I'm just going to eyeball it here and set an alert at 106. Baba was gapping up when I saw him earlier, and you see it now. Now it's selling off, low 179s. It's in a congestion mess. We'll look at him in 30 minutes. Axel gapping up 15 bucks, right smack in the middle of this mess. The daily and the weekly and monthly are garbage. You are gone, Axel. AON, garbage, gone. Why? Trades like garbage, you're gone. Weight Watchers. I saw this morning was a bullish pro gap, you know, 74.50-ish, and that was right over the high of these three bars. So this was a tier 1 for me earlier when I was looking at these, but now it's not. It's coming in hard. It's still holding this base, so I'll watch it. I'm going to put him in a window. Tisro, bearish all time frames. And if this morning's strength can get negated under the low, you know, it's here on monthly support. I get it, but look at this. This is a power daily and weekly downtrend. I'm going to set an alarm at, 48 bucks, 48 and a quarter. Stamp. I don't like the way this trades, gapping up, to resistance. P, Greg mentioned, yeah, this was what got my interest also. This multi-month bottoming pattern on the weekly with a price void. Gap too excessive right now, but definitely going to watch that. Greg mentioned the Loco. No, Greg mentioned Shack. Loco here, I can't tell what it's doing. We'll look at it later. Herbalife, I can't tell if that's real or not, but it's strong, daily, weekly, monthly. I'll keep an eye on him. Let me put him over here. Because see, I mean, I can't rely on that. I mean, I guess I can go down to a 5-minute chart. Nope, see, I can't rely on that at all. Our G-Pro dog is still a dog. I think he and Fit both have problems. Fleur, we talked about. I have them in there twice. All right, we got a couple more minutes here, and we're on perfect timing. We're almost done. This CRM I just put in here, it's not an earnings trade. Earnings are coming up next week, but Greg mentioned it into the close yesterday as being strong, relative strength, breaking out. Same with LVS. It's not earnings, but threatening to break out here, relative strength. So those will be go-tos. Twitter is not earnings, but after the bell yesterday, it announced the data breach. So I just looked at it, but no compelling pattern. Down a little bit today. IP, junk pattern. Mattel, the junk. FE, junk. ATVI, junk. Bid, Light volume, but if that's real, 53.40. Oh, it's just gap into resistance. I mean, but it's still, nah, I'm not gonna even convince myself. CBS. Okay, now see, I can read that chart. Those are real prints. So it's gapping to $50, but it's gapping right into resistance. I have no interest. In ED, we had a bottoming tail. It went, the retracement was a little deeper than I wanted here, but I like the bottoming tail. I can't tell where it's gapping, so I'll just leave him there. All right, Intel. We have a short put, Dan, but no, it looks like it's breaking down pre-market here. There's nothing for a new trade at all. Sanjay Webb, WEB, gapping down to 1740. Very nice bearish gap. So you just apply the rules, which is what? Finding a compelling intraday setup. But I like that. Is that on earnings also or some other bad news? So Web, I'll watch that with you. Oh, not TED, TDC. TDC 3750. It's way down here. Just see how it sets up. That's not a tier 1 for me. CBS earnings yesterday. Yeah, okay. ANET 244. So that's bearish. It was a bullish weekly, bullish monthly, and now it's holding, you know, support here. Major support is 235, 240, but it's deep gap. So I'll watch that with you. Riot. Nice pop. I like that too. You know, look. Yeah, you know, we were watching this right here at the 200. I was looking at it, and look at that. It right there. It looks so good right there, and then it just failed. But now it's above the 20, and I like this run into the close yesterday, and pre-market. So something was up there. All right, my test row alarm. So I'll watch Riot with you. I have it in my other computer as one of my regulars that I look at. Shoot, what alarm was that? I just closed it. That I said I didn't. Shoot. Did any of you see what alarm just went off? Let's see if I can figure it out. Because I remember saying, if it gaps down here. Shoot, I have to. Oh, well, I'll find it. All right, SIBO alarm. Okay, so remember I just set it at 106. It's still not ready. It's not ready because of all this support. So that we'll come back to that in 30 minutes. Let's see what the broader market's doing. We're just range bound here. Resistance above, support below. But actually, this is more football players above than football players below. But, you know, if we just hold right here and chop around for 30 minutes, this might be an iron, not, well, I was going to say iron condor, but that's a spread, right? A iron condor is shorting an out of the money put spread, out of the money call spread, but provided you can afford the margin for a day trade, the proper option strategy is called short strangle. And what that means is we're shorting an out of the money naked call and out of the money naked put. If they were the same strike, for example, it would be called a straddle, but strangle is just out of the money, out of the money. Yeah, so if you have small margin, well, you can do two things. You can just take one side of it. If you say, hey, I see what you're looking at, Dan, but I kind of like the the bear call credit spread side better than the bull put credit spread. Just do one of them. And secondly, that's fine. I trade my sister's account, IRA, and I'm not allowed to sell naked in there. Well, I'm allowed to sell naked puts if they're cash secured. I'm not allowed to sell naked calls. So you just do a spread. And then, you know, the downside is extra commissions, but it is what it is. That's the spiders, diamonds. Let's look at a 5-minute chart. And I'm going to get rid of this pre-market data because it messes, you know, all of that is pre-market data. There. So see how it looks different now? It's a bearish gap under all of these football players, and it's 933. And if we're taking out the 5-minute low, this will be a great 240 naked call candidate. You know, and then I look at the internals, you know, VIX is going up, spiders, same, gap down, under. Remember I said this is kind of a into the close yesterday, was a pseudo head and shoulders. Here's the head, which was the breakout, which failed, 100% retracement. Here's my horizontal support, and also gapped under this support too. IWM, that's messier. That's a mess. All right, our Oxy is down. That's good. So now let me look at my Halliburton. Perfect. So now I'm going to do this Halliburton adjustment. We are short the 52.5 calls that expire today, which is perfect. That means we got 100% of the juice. And I'll just put we're gonna let those calls expire naked. And then I'm going to put a stop in for those, of course. But based on the pattern here, you know, my stop is the pivot, you know, the pivot on the hourly chart. It's a no-brainer. But let me look at the prices for selling our call for next week. Or we can just close them out. But the 52.5 calls that we have now that expire today, you would have to pay 8 cents to close them out. So that's, you got to make a decision. Do you want to close them out at 8 cents and roll them? Or do you want to let them expire worthless, but with a stop in place? So let's see, we want to sell the 53s or 40 cents. That's kind of tight. 53.5. 27 cents. Wow, that's not much juice. Or if the pattern were more bullish, then you just you don't sell them. You don't leg into a covered call until they're you know, more bearish. And now they're bouncing. So I'm just going to wait. Actually, I'll wait a few more minutes. I'll keep an eye on that though. First 5-minute bar, doji. Now we're trading over. This is the spiders. We're trading over the 5-minute high. But let's sit here and watch it to see what happens when it hits this brick wall. Look on the daily. We're on that 200 again. Look at that. That is amazing. We are the low. It's just kissing it right now. Doesn't mean to buy it. I'm just making an observation. And I have this fleur in a window, and it's weak here. Now the entry is, you know, it could be a 5-minute low, stop high, but that's just not my personal type of trading, because you know, the gap's too big, but you know, like if it just were down here to 54, 55, then that would be a pounding short. Oh, I thought we said we'd not use that term. So it'd be a highly confident short. But for me, I would wait 30 minutes on a big gap like this. 30 minutes gives me more confidence if it's going to stay weak or not. I'm just looking at our positions. Look at this FTR little guy. Woulda, coulda, shoulda. You know, we have the put spread, but we do not have the stock. And many times when you get these wide range bars, they aren't going to give you the luxury of a nice pullback or a 1, 2, 3. You just got to go to your intraday time frames and find your entry. All right, Q's more relative strength. It's filled the gap already, and it's now penetrating into that closing resistance. So the Q's are the strongest today. I'm still watching this. This looks great now. Look, folks, our USG. It's stronger than the indices. It's plowed through this resistance. Now this, I mean, I understand there's resistance here on the 15, but I'm trading the daily and the weekly and the monthly. So this, I'm going to give, you know, the market's rallying to resistance. I can't do it now. This is going to be a perfect 30-minute high trade if the market's holding. So I'm just giving you the alert right now. Perfect 30-minute high. And it's whatever bullish strategy meets your trading plan. Could be the put spread, could be a bull called debit spread, it could be covered call, it could be just buy the stock, it could be just buy a call option. And then whether it's in the money, at the money, out of the money, it's up to your trading plan too. Each has different reward to risk. But let me check the premiums for a put spread. Now, because of that bullish pattern, I'd be willing to go farther out in time. And there's only monthlies. So your options are 14 days or 42 days or both. Wow, they're spready. The $40 for May are 15 by 35. That's, wow, that's spready. Shoot, even the Junes are. That's crazy. The June 40s are 50 cents by 95. That's disappointing. But we'll come back in 30 minutes. ESPR on this 15, it's stabilized. You know, it's stabilized from this ugly red bar. 2 days of nasty volume, small bottoming tail on the weekly on major support, deep retracement. Now you have a higher low. So for a day trade on this pattern, it looks great. You just, you know, got to go to a smaller time frame for your entry and management. But this 15-minute chart looks fine in light of, you know, this other stuff too. Mark, yeah, that's one that Greg mentioned the other day. Are you still in that, Dan? Riot. Oh, waiting for entry. Okay. Well, your entry is right here, Dan. It's over this base. So you got a 2-bar pullback after kind of the small run. It's not a breakout, right? The breakout's over that. But it was a retest pattern. But your entry is over 650. All right, I'm looking at Riot. It is optionable. And it has weeklies. Jeez, it's so spready. I hate this. The $7 puts for next week, 5 cents by 40. It's nuts. Okay, the 2 weeks are better. The $7 naked. So follow me on the math. I'm going to do it, just in my head, since I'm still watching the market here. A $7 put naked for 14 days to expiration, you get 40 cents, which is massive premium, right? Remember, my 1% rule would only be 7 cents. So 40 cents on a $7 stock is massive percent. And the stock's trading at 784. Is it halted? I mean, I don't see it moving around. That's weird. Let's go to a 5-minute chart. That is very weird. It's not moving. But anyway, continuing with my math, 84 cents away divided by 784 is like 11% away. So you have an 11% cushion and taking in massive premium. So we'll keep an eye on that. Qs again. Okay, look, they're plowing through resistance. So the deeper they get through here, we can buy the next pullback possibly. I'm just getting you ready mentally for a day trade into the bigger void from yesterday that we were talking about in the afternoon. Diamonds just rallying to resistance, filling the gap now. Spiders still same, but I'm just going to look at some put premiums, just curious to see what we could get paid if we did the 260.50 for today. $260.50, 30 cents. So it was either Dan or David. We were talking yesterday about, hey, on expiration day, what's enough? And I can't use my 1% rule today because it won't work. I view it as if I have a confident pattern that says, yeah, I think we're going to hold the day's low. Is that worth $300 to me? Stop under the low. And that's how I assess these day trades. No, I don't have a magic formula though. But Qs are still the best. Let's look at the 15-minute chart for our price void. All right, it's still nothing to do, but the morning action after 16 minutes of trading is bullish. It gapped down, deep retracement. It's bullish. So the problem is, how do you get on board? And I told you my suggestion, even this deep. So now if it can controlled pullback or go sideways at the highs here for the next 15 minutes, then we can buy a breakout. And the targets are not huge here. So I'm just talking day trades here, unless Greg steps up and says, hey, I think we're ready to nibble on some put spreads, but weekend here, always have weekend risk. So we're probably not going to want to do that. Yeah, thanks for following up, Hector. That looks great. Greg mentioned that yesterday afternoon. This is the area after a pro gap. And it looks great, Hector. That's a great find. So let's just watch it here on, pullback with the market. And you drill down to a smaller time frame. And you can buy a controlled 5-minute pullback. It looks great. I like it. And I'm also going to check out a put spread on it. That one I would take the risk for next week because look at the pattern, pro gap and it's pulled back to support. I like that. Thanks for flagging it. So next week, what strike do we want? Well, 160 is kind of tight, but you only have 160s or 157.5. You could do the 157.5, which is way the heck down here. The midpoint's only 32 cents. It's not meeting my 10%, but could you make an exception because of the confidence of the pattern and it's so far away? 157 is far, it's under all the support. But yeah, I'll watch that on a 5-minute pullback with you. All right, this USG continues to look great. All right, I'm going to go ahead and just post this in our advisory letter as a 30-minute high. So that'll, give me a couple more minutes before I hit the send button, and it'll have to take out the high, which means, there's more buying coming. And the stop, the first stop has to be under this big old wide range bar. Let me check earnings. July, so we're good there. Yeah. I mean, I'd love to do a bull call debit spread, but wow, it's just too spready now. Let's look at Weight Watchers. Yeah, I love that spiders. Yeah, I love that it negated this red bar. This is another great put spread idea. Let me check him. We could do the 70s there. Too illiquid, 20 by 95. All right, Q's. Okay, this is fine. If we can go sideways here, and it might take a little longer, like 10:15, 10:30. I mean, 10:30 would be better. If this can get this 5-minute chart, right? So there's 6 bars in a half hour. And see, that's why you need to go to math class, to follow that. 6 5-minute bars. If it can chop around up here in the resistance area, 6 more bars, then I'll have more confidence for a day trade long there. Spiders at resistance. Diamonds same. Tad bit deeper. IWM a mess. Hector, you get the award so far of you know, telling us when you had a good intraday pattern there. Nice job. And it's still a setup. It's a controlled 5-minute pullback. All right, I'll take a look at some of these now. All right, right, it was 784. When I said, is it halted? Maybe it's just light volume. ANET, you know, there's no pattern, bearish gap, but it's not giving us anything right now. TDC, it was a big gap. See how you had a bottoming tail there? I'm deleting him. Web, gone. Red Hat was not an earnings trade, but over yesterday's high is a go. So look, I'm just going to set an alarm right here at 164.60. That's when I want to be notified. Fleur was this big catastrophic gap. VFC, wow. That's just pain now. I mean, it looks like it's heading deep in here, and then if you could revert, well, wow, that's destroyed. Starwood, remember I said we'll come look at it in 30 minutes because it was gapping to resistance? Well, here's 30 minutes later. It's a definite put spread candidate if there's any juice, but I can guarantee you there's not, because look, this is only 20 cents from here to here to here to here. I mean, you could do a 20.50 if they had it. Starwood, no, they don't. They have 20s, which is 0 by 5 cents. So you're gone, Duncan. Yeah, I look at this. You got support, support, support. This is a triple support area on the 200. I got my 20 curling. It's breaking out on the daily and weekly. I like it. You know me, I love selling my puts. $60 put is only 15 cents, 20 cents by 30. So then the question is, would I go out to, would I either do a directional or maybe a covered call, or selling a 62.5 put? So think about this, folks. This is what I said. If you are willing to buy the stock right here at 62.50, just hypothetical, then you should not mind selling a 62.50 put at the money put, which is 95 cents right now. So this can go 95 cents against you, and you would have the same cost basis as buying it here at 62.50. If we went out to May, the 60s are very juicy. So I need to check earnings. But the 60.55 is 60 cents. That's very juicy, but you have to hold it 42 days. That's the trade-off. But is the pattern confident enough? Here's my 60. So you are placing a bet 720, you're placing a bet that this is going to hold this support because of this breakout on the daily and weekly for July 25. So we're fine for 42 days. I think I like that play. I know Greg's thoughts on 42 days. He thinks 2 days is too long. And you also know when you go 42 days out, you aren't going to get the same time decay that we get in selling options 10 days or less. CTRL, yeah, that's a pro gap. I like the monthly also. It's a monthly buy setup on the rising 20, but you just got to get a more confident intraday setup. Here's a 5-minute. Maybe if you get a W bottom here, double bottom right here, higher low, then that could be good. LNG, gap and crap, you're gone. Sell G. All right, Qs are plowing here. That's garbage. See, it's just smacking the garbage. And we knew that earlier, but we said we'll look at it in 30 minutes. All right, so come on, Qs. I want you to go sideways a little bit more, but he doesn't care about me. SIBO, shoot, remember, this did exactly what I didn't predict, but I just said if it happened, remember? Oh, and this was the one, you all, that my alarm went off and then I closed it too quick. And I said, you all help me, what alarm went off? And it was this one at 105.50. Because remember I told you pre-market, if it gives up the morning gap and takes out yesterday's low, then it's going to be ugly on the daily and weekly. And that's exactly what just happened. If we were in this at the 105.50, it already fell $2. So I'm not going to kick ourselves, but this movie played out as, again, I didn't predict it, but I said if it did that. Baba looks like it's garbage now. There's our Weight Watchers. Okay, see, that's not a compelling 5-minute chart, but it's still worth watching. Retracement, I don't want it to go under 50%. This Tesro, this was very similar to my analysis on SIBO. A little different because it didn't gap up, but it's the same flavor of analysis, meaning the morning strength is now negated. So I have a bearish daily, bearish weekly, topping tail now after earnings on the daily. Your entry is now a 5-minute sell setup. So I'm going to tell you exactly how to trade this. You watch it bounce. If it does, I mean, if you want it on board, you just have to short it now. And, then there's no woulda, coulda, shoulda, because, hey, Dan, it didn't bounce. But then your stop is the high until you get new pivots for you to manage it. But ideally, you want it to bounce 3 bars. Do not go more than 50% bounce. Reversal bar, topping tail, and short under the reversal bar. Same stop as the high, and then go back to the daily to manage it as a swing. Or it could be day trade to you. But that's exactly how you would, that's the setup and the entry. All right, I'm going to put that in a window. Now I'm watching this Halliburton. I told you I was going to tell you when we're going to leg into it. And since it's now weaker, I'm going to go ahead and have them sell the calls now and just put a stop for our ones that expire today. And my stop's going to be right over, well, they're the 52.50s, so it's going to be right here. My stop on the short calls is 52.45. And if I stop out of those, if it just rips, you know, into the close, we sold those calls for 83 cents. So even if I have to buy them back at a dime, hypothetically, we have a guaranteed win in selling those beautiful calls that lowered our cost basis. And that's why we do covered call campaigns. But since the premium has been sucked out, here is my dilemma that you can help me answer. Here's my 53.5s. I think I'm gonna have to do the 53s. It has to be tighter because there's no juice. The 53.5s are only 23, 24 cents. Even the 53s are 36 cents. But then if this turns bullish, I can always buy them back next week. I have a topping tail red bar on the weekly. It's extended, so I'm going to do that. So thanks for helping me decide. Your feedback was very valuable. Kidding. So I'm going to sell the May 5/11/53 calls for 35 cents. So that's further reducing our cost basis. Let's see. I need a calculator on this one. Oh, no, I don't. It's right there. Reducing it to 39. Got it. All right, that was just sent by Telegram. Now let me update it in the spreadsheet, but that's how I made the decision to roll them with the charts. So our cost basis now on Halliburton is $46.39. $46.39. So that's $5.50 gain. Not too shabby. XLE we already rolled, so that one's fine. I'm watching Riot here. Oh, it popped to a new high. Well, yeah. Yeah, I like it. Let me check these puts for next week. The Qs still are plowing. see? So it went sideways a couple more bars. It doesn't care about me, but now's the time to enter, it looks like, for a day trade. You know, I told you I wanted 6 bars, but I got 2, 3, or 2, because it's 10:08. But this is a bullish entry for a day trade. All right, Riot next week. The $7. Oh, I went. I'm sorry. It was 14 days. The $7 are now only 35 cents. Didn't I say earlier they were 55 cents? Because I said it was massive? Or was it 45? Shoot, but it's only 35 now. Let me see when earnings are. Yep, see, I hope you all followed our analysis. That for a day trade, that's your entry. Now, once this bar closes strong, you actually could tighten your stop to under the low of that bar, because that bar should not get negated now. Spiders, since the market's holding 200, I'm going to look at shorting. Let me see what I can get now for shorting a 261 spider put for today. It's 22 cents. I think it was 31 earlier, something like that. I'm going to watch it on the next pullback here. But that's the bet you're making. How confident are you that today's low is going to hold? And if you can afford the margin, I view it as, you know, a $220 happy hour. Now, since it is Friday, we could sell Q's puts. But they aren't going to be as juicy. The 161. Well, the 161s are 13 cents. It's 130 bucks. That's not bad. I like the low of this one better. So let's watch this. I'm going to do this trade on this next pullback, as long as, or preferably into 1030, as long as the strength of this one bar is holding, then I'll take this bet. And it might not wait for us. So Tessera that we talked about did not give you the 3 bounces. The P is overbought. We have to wait. Whoa, Loco! Look at Loco. You know, we liked them on this bar over the last weekend, but we had to wait for earnings. But now it's not ideal, but it looks like it's definitely bottoming. So the play on this, if you wanted it, would be a 5-minute buy setup in Loco, stop under the low. Let me see if we can get paid on him anything. Nope, $10 put for 14 days is 5 by 15. Nope. Okay, the Herbalife. Now that's a bullish bar. This is another one where we could do a 5-minute buy setup, or preferably a double bottom would be even better. But this looks great. Look at this. This is a breakout to all-time highs above the 20. Let's see if I can get any juice for that. The 105s for next week are 50 by 82. So that's spready. Now, 2 weeks, the 104, 104.98 is 54. That's not bad. So that's under the low of today, but you know, we'll just watch it. It, you know, it came back too far in here and is, I don't like this intraday at all. Wow, look at that shack. Wow, 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 wow. I said yesterday that this could be a core trade to us. Now another, in terms of gapping again, if it, you know, gap, I remember telling you yesterday, if it gapped just over these highs, then whatever I said, like 10-minute high, 15-minute high, whatever. But it was a big percentage gap, and it didn't even have one tick lower. That's strength. So you just have to, if you know, the entry in retrospect is over the 5-minute high. But then what if it took out the 5-minute high and then came in? Would you take your stop, or would you add, or you have to have a plan before you hit the button? Here's the, look at the cues moving up here again. And again, on a pullback, I'm going to short those 161 puts. I need a controlled pullback. LVS we're watching. This looks great for Monday. There's no reason, in my opinion, to get into this ahead of the weekend. CRM we were watching. UPS dog. You know, deep into this wide range bar, but for Monday, we can consider a put spread. I mean, if you wanted, I mean, the Riot, I don't know what the company does. You know, people think it's bogus, you know, this and that. But this is the intelligent time to enter if you wanted a long-term position in Riot. The daily, weekly, monthly are in alignment. Greg, can you tell me earnings, please, Riot, since mine's not showing? Now the $7 puts, if you wanted to go out 42 days, are massive. So are the 6s. So you can do a bull put credit spread. 521, okay, so yeah, we can't do June, but we can do May. And those 7s are 35 cents now. Like I said, I thought they were 45 or 55 earlier. And I would not do Riot naked. So the 7, 5.5 is 25. That's not bad. 7, 5.5 is 25. So it's meeting my 10% rule. Why? Well, $2.50 wide is 10%. 10% of that is 25 cents, but you have to hold it 2 weeks. But you have $1 of cushion. $1 divided by 8 is like 12.5%. It's huge. But it's a risky stock. It's highly volatile and it's risky. Even though I didn't hit the button yet, I hope I hope my detailed commentary gave you the thought process on many of these. We said this one deep into resistance, let it go sideways. I wanted to go 6 bars, but it doesn't care about me. The entry was over the day's high while this bar was forming. And now, I might get my put spread. I mean, they could put that McDonald's. That was great. S-Fly from the other day. Got a little sloppy. Cisco. Look at Apple. Jeez. Wow, that is almost back to the all-time highs. But we were saying for 2 days, relative strength. I know Greg was talking about, the Buffett news, and it just cracks me up how the public just are sheep and they just follow nonsense. Like when a hedge fund or Buffett or anybody buying millions of shares of something is either accumulating or distributing, meaning selling, do you think they're going to tell you that they're doing it while they're doing it? Or do you think they're going to tell you after? So the fact that Warren's been accumulating more shares into weakness, now you want to buy it? It befuddles my mind. Square, nothing.
Dan, the law says when he has to report it. So I think he said on Saturday when they were interviewing him, everyone will know. And then he said something like he bought 85 million shares.
Okay, so fine, he has to do it for legal reasons, but we all know darn well that they report things like that for marketing reasons and also to give CNBC something to talk about.
Of course. Well, I mean, when Warren Buffett says something, people listen, right? Doesn't mean he's always right, but when that report comes, people are going to know the price at which he is accumulating.
But true, but do you think these sheep that I'm referring to, 99 point whatever percent of those sheep know that, and that they're going to go look up at the 10K and say, well, he bought it at 150. I'm surely not buying it at 170. No, they're sheep, and they're like, oh, Warren likes it, so I better get in too. Look at this Procter & Gamble we said might have been, when you have another failed breakdown and it doesn't go very far, and it just, look at that, it just blasted all day long. Look at that. One red bar is all, and no retracement. So I think this is a short-term bottom. It'd be a great put candidate, but not much juice. Isler dog, man. What about our LMT? Hey, LMT had a good reversal yesterday, and it's a pseudo, and I use the word pseudo because it's not, perfect, but kind of a pseudo reverse heading shoulders. The gap down's my head, left shoulder, right shoulder. This could be an afternoon breakout and or put spread, but I looked yesterday and there was no juice. And knock, I looked yesterday, it's actually lagging today to LMT. Boeing lagging. Juniper, Estee Lauder. Excuse me. EL was a bear earnings gap. It's getting its sea legs back, but I wouldn't touch it. I wouldn't touch that thing. Garmin, nothing. Triple L, still relative weakness. Another military. Cigna got what? Oh no, it was CAC. Got whacked yesterday, but stabilized, but nothing to do there. Elfin still halted. HLF, I like. iRobot, I have no idea if it's going to hold or not. It's on this prior low, monthly lower low, lower high. I wouldn't touch iRobot. This was a pro gap yesterday we were watching. We can keep this on our list for Monday. You know, if it can stabilize around here, it has room to 130. That's $8 run. Splunk. It's at resistance, but it's kind of a pseudo 1, 2, 3. But I don't like all this resistance right there. Baidu's holding well. Look at this. Pro gap up. 1, 2, 3, 4, 5 bars. Had a little gap down today that was negated. I like this for a put spread for Monday over, you know, is it today's high or yesterday's high? But let's see what juice we can get now. But I like that for Monday. Now, Dan, here's another idea for a day trade when we were talking about is the juice enough? The 250 puts, which is today's, you know, right here, the low of this wide range bar, that expired today, 26 cents. So if it can, you know, take out the high, maybe you'll get 24 cents, 240 bucks for a day trade. That can go $3 against you. So is that a good reward to risk? Market's perking, so I'm actually all in favor for shorting a daily put spread right now. No, but that's what I mean. You can't do the 1% on when there's only a few hours to expiration. That was our discussion yesterday, that you can't apply those rules. I apply my own rule, which is that worth 260 bucks for me taking that risk? It's now 10:30. So I have 10, 11, 12. So I got 5.5 hours risk. With the mothership perking right now, I'm looking for a bullish trade right now. So let's all work together. Even the spiders now, we could sell the 262s. I don't think we're going to retrace this far based upon this action right now. Spiders 262. Let's see what we can get. 23 cents. Everything's, Greg, what are your thoughts on even selling puts for Monday or Wednesday? So far, this is nice action. Yeah, but Disney is a total mess here, but yeah, buyer stepped up. Oh, it has earnings. Yeah, okay. But yeah, there's zero pattern here to me.
The easy answer, Dan, is to leg into it.
But I mean, remember we had the discussion yesterday about how far out you would like to go?
Well, you're talking next week. If it closes well, I have no problem buying the spiders, rather than an income trade, a
Right.
directional trade. So
Right.
right now, the way it's moving, it's like not going to let you in.
Correct.
Right? Probably, maybe it pulls back later. That's the unknown. So the easy answer is partial position rather than thinking all or none.
Fine. So do we partial some now or into the close? Well, you answered it for the directional. I'm talking for the income.
The
We're kind of chasing it now, but
Well, I hear you. So I mean, just a piece of it, which appears to be a no-brainer at the moment, but running away from you seems to at least a partial, because it is where it is, having already moved up. So while even before the pullback seemed logical, it's not happening. So it appears to me that the majorities at the moment were viewing the same thing as you were with that opinion, and more are feeling they're going to miss the boat. And now it's running up, and the continued thought of, oh, it'll pull back, maybe not. In my commentary this morning, I said, while it's down here, pre-market, I don't think that this will collapse. It could have, but it's yesterday's bottoming tail bar was suggestive that buyers were going to step up again. Now, at what moment do you make the decision to get in? Of course. So when it turned around up, what around, I'm looking at the 2-minute chart, got into the gap fill and went sideways, partial leg in makes sense. All or nothing thinking is very difficult. We all struggle with that. And the easy answer is, look, we struggle with it because we want to make as much money as possible. And if we partial in, we don't. So it's a psychological, mind game, but the right trading answer is partial position looking to add. If it runs, you've got something. Now you've got nothing.
right.
And if it goes down against you, you don't have that, stomach twist that, oh, you know what I'm talking about.
Of course. No,
And
I'm all in favor for doing
yeah.
that. Here, look at
So, you
Greg,
know,
look at our IYR. That's going to be beautiful for Monday. Or
absolutely. It's bullish price action sideways at resistance. And that I would not feel a rush to get into. It's a slow mover, but later in the day, sure. Kula, if I'm saying your name right, sorry if I'm destroying it, on YouTube, asking what the market internal suggests. They're dead neutral and have been for, well, probably a couple of weeks now. So they have giving us no insights as to the direction. So right now the price action is saying higher, and if they do run higher next week, well, then they'll probably get short-term bearish, and we'll see if that happens. What has been happening a lot with the market internals is that one of them reaches an extreme and the other one doesn't. So my rules say no signal, and then things kind of chop, and it's kind of the nature of this market that is consolidating this year after the run up from the beginning. They've been sentiment has been neutral since the the bullish extreme back at the beginning of March. All right, February, end of February or so.
I was just looking at this as a put trade for next week. Sloppy as can be, but there's support right there at the 200 and the 60. Cisco could be a put play. Cisco must have earnings because it's juicy. Yep, May 16. Wow, nice McDonald's, Hector. And here's your measured move. I looked at the airlines, they're all junk. Hey, this apron junk from yesterday had a nice close, moving up.
You know, Pat, my opinion, you've got call options. The spiders may eventually go higher. But if they pull back and then do that, your options may not be worth as much as they are now. Because the momentum slows down and the pullback the option market maker will probably squish the premium out of them, depending on, I don't know how long out you go. So I would suggest you trail a 5-minute bars low to kill it. If you're coming, you're getting into the second reversal period here, actually into it. There's a bit of a measured move on the 5-minute time frame. It's getting close. The futures are getting closer to the resistance area between 2642 and 2655-ish or so. So it's got room to get into some stiffer resistance. You haven't gotten any high tick extremes yet to say it's the end, but they're options, which, the premium or profit you have in them now could evaporate rather quickly on a pullback that winds up being bought.
This KHC is trying.
Yeah.
It's been beaten up on the weekly and monthly. I'm just going through a bunch of things that I have here on my other computer.
It's been a lot of years since the late 90s when the NASDAQ market makers were exposed for the criminals that they were. And these option market makers are a similar situation, but it continues.
Wow, that TiVo gap yesterday sure failed.
Completely.
Yeah, I'm going through a ton of stocks over here, and I'm not finding anything of interest. Wow, look at this. You know, I already looked at Triple L. No, that's not it. That's lumber liquidator, Triple L. But I wouldn't touch this unless I got a retest pattern. Red Hat alarm. See, it's breaking out of there. But it's still, this will be great for Monday. And Greg, remember this GLNG?
Yeah.
Maybe for Monday. Remember this VMW that we were watching as a possible put spread here? It's getting tighter. Look how tight these ranges are. Wow, it's very juicy. Very juicy. Let me check earnings. May 30. Wow. Wow, look at the juice on this thing. We could do... It's spready, though, is the problem. Very spready. But 128, 124 for next week is 70 cents. That's very juicy. Look at that. 128 is way the heck down there. Yeah, nice job, Pat. Yeah, I remember when you were doing that. It's a nice job. This looks great to me. The 128, 124. It's kind of lagging the market a little bit here today, you know, because it's not breaking out. But I'll watch this until the close, and if it closes like this, I'm going to post this as a put spread. Let's just see what it does on the pullback with the market. Overstock can't get off the ground. This test row that we were talking about, look, it couldn't bounce the 3 bars to give us a sell setup. It's still weak. Isn't this amazing? Just last year, this was 190 bucks. And you want to be a buy and hold trader? I wonder how that person feels, because somebody bought this stock at $192.94. Somebody did, or it wouldn't have a high print of the day. I wonder how that person feels. and how they manage their trade. Wow. This is amazing action today.
Yeah, Tim is asking about CSX. You think about it as a spread in YouTube, or just an outright buy. I like it as a buy. I don't know. Does it look as a spread? Working on a list of dailies that look interesting, folks. I like Cake, Home Depot, actually the CSX, and
So what do you want, a put spread on this? Or that's what his question? Excuse me.
what are you saying? Do you think it's a buy, or does it make sense for a spread?
Yeah, no, I didn't know if somebody had a specific question on YouTube.
That was his question. Looking at CSX buy or spread.
Yeah, I would do, I'm just answering me, of course, a put spread. And that's not because, that's what I love doing over directionals, but there's too much resistance for me for a directional right now. I like the bottoming tail in this wide range bar here. I like the pro gap. I like the bottoming tail in the 20. I like, the engulfing. I like that it gapped down and took out yesterday's resistance. So I like all that.
So let me ask a question about this, because this daily, weekly pattern suggests the ability to get through that resistance. And so I think, in my opinion of what happened, I think CSX was a victim of yesterday's market, that bottoming tail. So while that resistance is there, of course, and has to be dealt with, which, theoretically will slow the upside until it gets through it, not moving with momentum. It could take a day, 2 days, whatever. If the market blasts off, it may take a few hours. So what option strategy, time to expiration, would make sense to give that leeway?
Well, as you know, a short put is a synthetic equivalent of a covered call, and all that means is they're the same reward to risk ratio. So if you bought a stock as a directional, but then you sold a call against it because we think it's going to chop around for a while, then if it does turn, or when it turns more bullish, you just buy the call back and then let your your long run. Or you just sell an out of the money put right now. And then if it turns more bullish, you leave the short put in place, and then you just put on a new directional trade. So they both give you the desired approach to that assumption.
And a debit spread with some time.
Yeah, make it absolutely. So yeah, a debit spread is the same as a covered call, except instead of buying stock, we're buying an in the money call. Correct.
Wouldn't that be cheaper?
Absolutely, it would. And less risk. And that's why we favor those. Absolutely. So since the monthly looks good, I would do what we call a bull call diagonal, because I want to buy a June in the money call to give it time to operate. And I'm looking, I would do the 52.5s, which has a 90 delta. But then I'm going to sell a shorter term call. So I'd do the Mays, which are $2 away. I'm sorry, 2 weeks away. And I would sell the 6150s for 42 cents. So that's a bull call debit spread with the midpoint right now is $7.05. So that's significantly less than buying the stock, of course. And the 61.5 is way the heck up here, right at the highs. And then we have 2 weeks, and if it churns around and gets more bullish where you don't want to cap your gains, you just buy it back to close. And you have not lost money. I mean, I have to highlight that to people. They're like, oh, I don't want to cap my gains. Well, even if you buy, hypothetically, the call back at a loss, you still have net made money. You cannot lose money by shorting a covered call, by shorting a call around your stock or in the money call. All you can do is cap your gains, but you cannot lose money on that. You're putting money in your pocket to lower the cost basis.
Someone else is asking about a put spread on NTAP, which looks more like it make a lot more money directional wise. It's a very nice uptrend. Mm-hmm. It's going to report earnings on 5/23. So you need to figure that into your your play, so you definitely have time there. And if the market was to take off, I would think this will follow, but the earnings are 20 days away, 22 days away. You have to consider that. Yeah.
And there's no May 18. There's grape juice there. I like it. I like it a lot. So the 66.60, which is $6 wide right now, is 67 cents. So I'm going to watch that into the close. It looks great. I mean, you got this high to deal with, but that's good juice. Meets my 10% rule. 67 cents, 14 days, and your strike is right there, the 66 right there.
Okay.
Cake looks great. Wow, that looks like a again, I don't care about terminology, whether you call it a core or swing with a pig target, but I think this has a pig target.
They make cake then.
Well, what do you think cake icing's made from?
Fat.
Right, that's pig hide, right? So this could be a $4 winner, which is pretty good percentage. I like the daily. It's kind of a reverse head and shoulders. You got your head down here, left shoulder, right shoulder, rising 20. This real body, if it closes here, is a closing breakout. It looks great.
All right. I liked it.
So now we would do the same analysis, which will probably be a bull call diagonal. And I do the same thing that we just did that we walked through on CSX. I'd buy June in the money and selling out of the money to help pay for it.
That's why. Yeah. Bill in the room is mentioning S-Fly, which is consolidating. It's one of my favorite patterns on a gap up. It's hard to tell when they're ready, Bill, to take off. You got to be watching it, at least have, of course, have an alert. But these consolidations can last a few days to a couple of weeks or so. But if the market's going to go, it could take off after only 2 days of consolidation. So definitely let's keep an eye on this for next week. If it was going to blast today, I have to believe it would have done it already.
All right, Intuit. We could do a same thing. I mean, do you want a directional or put spread or both?
You can do both. I mean, anyone has their own choice. This is making all-time highs and looks fantastic. I mean, you talk about relative strength. You think about the pullback, in the market and what it's doing versus what this is doing, and it's one of the strongest things out there.
Right. So I'm gonna post a put spread right now, and then we'll watch it into the close for a directional. It's just the market is straight up right now into 11, so I'm not sure I want to do directional trades right now, unless it's like you said, if it it's all lined up, you can leg into it. And then, this Home Depot, like, God, I'm so ticked we got stopped out yesterday. But, in retrospect, and I was telling people, look, I don't have any right answer here for you. But this one was still pulling into a wide range bar with all this support. So I do regret not sending a note to hold off on the stop on this one just because of the pattern. Whereas Cat scared me more. Cat was breaking down, this was an ugly red bar at the low, breaking support on the weekly. You know, that one was a tougher call. But Home Depot, and I'm just giving you honest trade review right now. I wish I sent an alert to, you know, give that one a little more room. Because, yeah, I mean, we could do a put spread again now. The 181. Not this second, but, you know, if it closes strong. It's, if we go 2 weeks out, it's very juicy. I'm assuming it had earnings already, but let me double check. No, May 15th. It does have earnings. That's why it's juicy. So you can only, if you sold puts, either sit through earnings and you know, assume the risk, because you could get juice for the 180s way down here. So, Greg, is that one you would risk holding earnings if the market's turning bullish?
I wouldn't risk anything holding earnings with options.
All right. Well, no, don't confuse the options. It's saying you would own the stock at 179. Approach it that way.
Not interested.
All right. All right, looks like Intuit and the market are tired right here, so I'm not going to even post this Intuit put spread until the afternoon. But let me see what, well, I'll do it then. So the Intuit $10 wide, 185, 175 is $1.25 for 2 weeks. Yeah, this is you know, like a balloon day of buying. On my 10-minute charts, there is not one red bar in the indices. Qs, spiders, diamonds. All right, actually on Intuit, I'm going to do half now, half into the close. And then I'm going to say you can add into the close, provided it's trading above 188. And that's just, you know, looking at retracement right here. You know, I don't want it to be here because then I'll have a topping tail.
As I'm talking to Van on YouTube asking about LRCX for a directional spread. You know, Van, that type of a pattern could work out because the market appears to be getting ready to move higher. There's plenty of mess above. However, you know, it's got that resistance and the 50 MA just above 200. So that, you know, a 6-7 point move, if you can come out of here. But these type of patterns historically don't move too fast. So playing options with a pattern that, you know, the weekly's pulled back, it's starting to reverse. Maybe it's got a, you know, a breakdown failure. It, it may be good as far as a directional point of view, but with options, you know, you've got that time decay and the you know, you deal with that. So it may not work out in the time frame that your options are in. So I like the pattern, one in which, you know, it looks like it could go higher in the coming days, but a direction, something like this is probably, not probably, it is a better candidate for a put spread versus a directional play because it's been in a downtrend and it's got resistance up above. So with the put spread, it's like, okay, if it goes up slow, that's fine. If it goes sideways, that's fine. As long as it doesn't tank and its earnings are coming out July 25th, so you don't have earnings risk with it. I think that's a decent candidate for a put spread versus a directional. And of course, you know, I could be wrong, but the market could be what gets it moving. So, but so if it moves, you know, you still made money with the put spread. And if it doesn't move, you still made money with the put spread as long as it doesn't go down. Whereas something like the Intuit that we were looking at, which does look like, you know, it could go up significantly and with the market, you know, at its back, that makes sense for a directional.
All right, let me see what we can get paid. Wow, I can't believe LRCX was 230 bucks. What's this NVIDIA doing we were looking at yesterday? That held well. That would have been a great put spread candidate for today once it took out today's high. Yeah, LRCX for the 185. Wow. When did you say earnings were? I thought that you said the 15th.
725.
This is very juicy. The 185s for next week. $185, $175 is 65 cents. Now it's not my dollar, but it's 7 days, and it's 180. Oh, that's 185. Okay, so it's right there. There's my 185. It's on the 15-minute chart. It's under all this. Hourly, there's the 185 right there. So you have one pivot, two pivot, three pivots, and kind of the real bodies here. So that's a lot of support on the hourly chart right there, and an uptrend right now on the hourly.
Yeah, man. When I was saying with the earnings, they have to be already out if the next one's coming in July, the end of July.
All right, I'm going to post this LRCX for the weekly trader.
Does that mean buying puts. Damn, I guess somebody had to sell them. Somebody to buy them.
Right, but we're the ones selling them.
No, Dan in the room is showing a $25,000 put trade on the spies in the last few minutes.
Sure, it's probably the market maker just, hedging. So yeah, it's a buyer. Sure, that's how you interpret it. Yeah.
Well, momentum definitely slowed down, and looks like any time where the market starts its choppy point, and we all find out whether the buyers want to hold it up here and chop sideways, which would be a strong indication that things will probably go higher on Monday, even if they pull back a bit. Of course, we don't know the moment-to-moment pullbacks. I'm still here, Dan. Let me see what Dan posted in the chat. I think he assumes that you guys are getting those. I'll post in there.
Yeah, I'm still here. So whatever the question is.
It's in the chat. You're saying, did you post that? Did you? So that is a sell position, Dan asked.
Did I post what? I don't understand. Damn, I don't understand the question.